Looking at the week ahead in Asia with Peter Tal-Larsen, editor of Breaking Views. And let's start in Australia. GDP figures coming out. We know the resources boom is over. How ugly are the numbers going to be?
Well, the numbers are getting uglier progressively. I mean, they're still pretty good, actually, by all accounts. But clearly there's a slowdown going on. And we've seen that in the mining sector, companies like Rio Tinto slashing back their investment programs, cutting costs. So we know the slowdown is coming. The question then is there anything else that's going to take its place?
Well, is there anything else in Australia aside from resources is really the question.
Well, that's a very good question. But actually, the central bank, people at the central bank have been talking about the possibility that maybe property could pick up some of the slack in Australia, because investment in property has been slowing for several years now. And so the expectation is maybe they could build some houses and that would sort of pick things up. But the idea of saying, let's have a real estate boom to keep this kind of party going for a bit longer is slightly worrying, and especially when you've got banks that are dependent on funding from outside the country. So we think actually maybe Australia should just come to terms with the fact that they should have a bit slower growth and be happy with that.
All right, worrying times for Australia. We also have a corruption index coming out. And of course, we have to look at China and say, is it getting worse or is it getting better?
Well, this is the annual index from Transparency International, which is always quite closely followed. And this is key. The key about this is not Transparency International's view of corruption. This is what they call a perceptions index. So this is basically what people think about the corruption in those countries. Actually, you look at last year, China didn't come out too badly. They were 78th out of 180 countries with a score of 3.6 out of 10, which put them above India. But it is the second largest
economy in the world. So if it's down there, is it really something to worry about?
Well, I think, but the question also will be to see where they rank this year and do they go lower. I mean, last year they were above India, for example. It'd be interesting to see whether, in perception terms, given some of the scandals that we've seen reported recently, whether that actually gets worse. And then also, is that an opportunity for China's new leadership? We've seen Wang Qishan, this sort of troubleshooter, put in charge of the anti-corruption squad. Is this an opportunity also for China to say, right now we're going to do something about this?
Speaking of doing something about it, let's move to Japan. We get some data out next week, but politics heating up, fire on the Bank of Japan heating up in terms of monetary policy. What's the data going to tell us about where the economy stands?
Well, the economy, clearly there's clearly a slowdown. There's a question of how bad that is. The trade figures are worrying with respect to China because of the spat over the islands earlier in the year, but also with respect to Europe and the Eurozone, the slowdown there. So we think Japan's having a slowdown like a lot of the developed world. But really the question is how that then plays in, as you say, into the political discussion. There's this quite feisty debate going on between the Democratic Party and the LDP about the economy, and particularly about the role of the Bank of Japan. What should the Bank of Japan be doing to stimulate the economy? Should they be forcing it to try and set a higher inflation target? Should it be being forced to monetize the debt, as Abe, the LDP leader, is suggesting? So you can expect, whatever the data tells you, actually, you can expect that to play into the election debate and to probably end up putting more pressure on the Bank of Japan as well.
Pressure on the Bank of Japan. Interesting times for Japan. Thanks very much, Peter.
Thank you.